Welcome to our 2026 Economic Outlook Briefing. I'm Gunter Deuber, Head of Raiffeisen Research and Chief Economist of RBI. Today we will explore the promising growth prospects for Central and Southeastern Europe, with a special focus on the Western Balkans and Central Europe. As we analyze the key trends and drivers shaping the economic landscape, we also address the political challenges that countries like Romania, Hungary and Serbia face as they work to overcome obstacles to growth. Join us as we delve into expert insights, data-driven forecasts and actionable strategies to navigate the economic environment in the coming year. So let's get started with the details. In summary, the economies in Central and Southeast Europe are expected to perform slightly better in 2026 than in 2025. This is positive news for all economic actors active in the region. However, one must stress, regional economic dynamism in 2025 was already surprisingly solid from a regional perspective. This was due to the compelling performance of the overall European economy and the euro area in particular. Despite trade disputes with the US, as you see here, the euro area posted a GDP growth of 1.4 to 1.5% in 25. The growth numbers of 25 had been even higher than we initially assumed. For reference, in 2023 and 24, economic growth in the Eurozone was only between 0.4 to 0.9%. For 2026, we expect economic growth inside the euro area to come in once again at 1.4%. Our forecast is notably higher than the growth expectations from some official institutions and the current consensus, which stands closer to the 1% mark. Our economic forecast for Europe assumes tangible effects from fiscal stimulus in Germany and across Europe. We also expect EU funds to be utilized wherever possible, particularly in Central and Southeastern Europe. And this constructive environment should bode well for our core markets. In Central Europe, our current growth estimate for 2026 stands at 2.7% compared to 2.1% in the previous years. In Southeastern Europe, our current growth estimate for the overall region is slightly more cautious at 2.1%. This is mainly due to the subdued economic performance in large regional economies like Romania and Serbia. Other countries in the region, particularly in the Western Balkans, should continue to achieve economic growth of around or above 3%. So let's have a deep dive into the country-specific developments. In Romania and Serbia, the slowdown in growth in 2025 was primarily driven by country-specific factors, not broader regional trends. In Romania, necessary fiscal consolidation is impacting growth negatively. However, we view the economic policy path as credible and expect growth to exceed 2% again starting in 27. In Serbia, the political uncertainties are affecting economic and investment confidence. Thus, growth rates in 25 and 26 are projected to be at 2 and 2.8% respectively, significantly lower than the 3% growth rates seen in 2023 and 24. Let's have a look at country-specific developments in Central Europe. Those are particularly evident in Hungary and Slovakia. Hungary has lacked the overall solid regional economic performance since 2023. Unorthodox economic policies, prolonged high inflation, and weak investment dynamics are contributing factors. For 2026, we expect a moderate improvement, with GDP growth seen at 1.8% in Hungary compared to 0.4% in 2025. Election-related fiscal spending should contribute to growth. That said, the elections in Hungary will be key to improve economic sentiment. improved relations with the EU could unlock investment funds and could encourage local investments. In Slovakia, fiscal consolidation has caused economic momentum in 25. We expect growth of at least 1.5% in 26. The regional growth leaders should be Poland, Bulgaria, Albania and Kosovo, with growth above 3% achievable. We anticipate solid developments with GDP growth at 2% plus, well above the euro area, in Czechia, Slovenia and Croatia. In case of the Western Balkans, as you see here, we may see another round of positive news on the EU enlargement front and growth above the 3% level. In economies without country-specific headwinds, we expect balanced growth in 2026. In Central Europe, investments should increase slightly more than last year, posting a growth of 2.5 to 3%, while private consumption is also expected to grow by nearly 3% in real terms. In South European countries, excluding Romania and Serbia, investments should rise by 4 to 6%, with private consumption increasing by 3 to 4%. Thus, the lowish economic dynamics in Romania and Serbia overshadow the regional outlook in Southeast Europe, where consumption and our investments are projected to grow only by 1.8% and 2.2% in 2026 in case of Serbia and Romania. If credible economic policies and clear political perspectives emerge in key regional countries like Hungary, Serbia and Romania, we foresee an average economic growth in Central and Southeastern Europe of around 3% or above in 2027. We will closely monitor regional economic developments over the next 6 to 12 months and keep you updated and posted. In the surprisingly resilient Ukrainian economy, we expect once again a moderate GDP expansion of 2 to 3% in 2026. To perform according to potential and a post-crisis driven recovery, GDP growth rates of 4 to 6% would be feasible in Ukraine, but we only see a clear and credible stabilization perspective to emerge slowly in 2026. Our overall constructive economic outlook for Europe and RBI core markets in Central and Southeast Europe assumes no sustained political crisis in the region. Additionally, there should be no deep and lasting frictions in the areas of US-European trade disputes or on a geopolitical level. However, we all must be prepared for another year of political volatility. In this context, it is important to note that in 2026, midterm elections in the US under President Trump will occur, and it remains to be seen how China interprets the midterm implications of recent US actions in Venezuela. Many thanks for joining our expert briefing. I wish you a lot of business success in 2026, and we will keep you updated on our evolving economic forecasts. Thank you for listening.
Raiffeisen Bank International. Make it happen.